What is up, traders? Welcome to the official Trade Talk channel, where I show you how I analyze price for the most consistent and higher probable entries to help you guys become better traders. We're going to talk about Bitcoin, what we've seen last week and what we could potentially see next week. We are going to discuss a few macro things, what we're looking for in the long term, but of course we will focus more on the near term for next week. If that sounds good to you, make sure you stick around until the end. All right, so here I got Bitcoin on the spot market chart. This is the Coinbase exchange. We do currently have a daily support at 28,941.95. We are looking to see if this level holds for the next couple days to see if we finally get a bounce and get above this daily resistance at $31,000. You see, yesterday we tested that level to perfection and then fell. But it does look to me like it is holding at support currently. A daily close below means that we will be looking for lower supports. If this support holds up into Monday, then we will be potentially looking for a bounce back up to $35,060. Why $35,060? Well, I'm glad you asked. First, let's go to the 3-day time frame. You can see that that daily support is also 3-day support. This 3-day candle that we're currently working on right now closes tomorrow along with the weekly time frame. Here on the weekly chart, I'm going to bring this level down to here because this is your lowest weekly support level. That price is $31,788. That is why that daily resistance level at $31,000 held. Essentially, you have a daily resistance that is correlated with weekly support. So this is a big level to get above before you can test that $35,000 region. Over to the monthly time frame. Over here on the monthly, you can see that here is support, $35,060. That's why it was important. It is the monthly support level. We are looking for a retest of this region because this region also correlates with another price on another chart. Here we are on the weekly time frame of the BTC currency futures. Let's go down to the daily real quick so I can show you this $35,000 price region that we are looking for a bounce to. Basically, the bottom of this new gap here is what we're looking to fill, and the top end of that gap comes in at $35,180, which is $120 from the monthly support. Basically, this is where we're looking for price to find resistance. We're not just going to blindly short this area if price gets up to it. We will let resistance build in. If you remember when we put in the new weekly or the new 2022 yearly high, it took multiple days to find resistance and then roll over. So we're going to be looking for something similar up in here. This correlates with monthly support, and this is where I think we will be looking to add to our short position, as I do not think that this low is going to be a V-shaped recovery. So basically, if we go over here or if we go down here, we're going to see these two gaps. Let me put this one on the chart and here we go. So the reason that this gap was so important and for my target to the downside was because this gap is more important than this gap. This gap, even though it is a gap and it is unfilled from current price, once you put in the gap, you never closed it before moving higher. Bitcoin had already traded at $18,000 and $19,000 through this region. So as the bull market was going on and price was moving higher and higher and higher, it came in for a retest, and on that retest of support is when we got the gap up. So yes, this is an unfilled gap for current price, but this gap is not as important as this gap was because this gap has already been traded through. So what I mean is Bitcoin's price action has already traded through this gap for many days, this level of price action. So this gap, isn't the most important one. Whereas this gap, price had never traded here, ever. It did on the spot market, but not the futures exchange because the futures exchange closes. So basically we traded up. You could use this area here if you would like to say like this is the actual unfilled portion of the gap. Over here we tested about the midpoint range of this gap. Now the market could qualify that as a complete test, only time will tell. On the CME chart, you do not have any candles trading inside of 24,605 to 26,080 until this day here. So there's still a big portion of that gap that is unfilled, almost a little over $1,000 of price action that is still untested price. So I am assuming that after we find resistance, we come back down, we completely take out this gap, and then Bitcoin trades sideways for a few months down in this region. So we're going to be treating it like that. So let's go over here to glass node. All right, so the first thing we're going to look at is the MVRZ Z-score. Let me stretch it out here for all of price action. The MVRZ Z-score is the ratio between the difference of market cap and realized cap. That is how this orange line is plotted. So basically up here in this red section, that is what the market considers overvalued price. Down here in the green is what is considered undervalued price. Now, the closer we get to this undervalued region, that's when you're going to see more accumulation happening, because people want to be a buyer when price is undervalued. As you can see with the orange line, there is still room to go to get into that undervalued region. We are still not there. So assuming that what we're seeing is a V-bottom recovery is jumping the gun or front running something that has not yet happened, in my opinion. One other thing to take of note here is when price does finally get into this undervalued region, it can trade inside of it for a very long time. Basically, what I'm trying to tell you is you do not have to try and buy every single wick low thinking that you're going to miss a move. You have months and months to prepare to buy the bottom of the bear market cycle. Okay, you do not have to rush. As you can see, when we had this $6,000 floor, everybody thought that was going to be the bottom over here, and then you got that push lower. Notice how the floor was right above the undervalued region, and then your last capitulation move to the downside put you in the undervalued region and traded in the undervalued region for over a month. So there was many weeks of price action transpiring inside of the undervalued region. Doesn't mean it's going to happen again, but it has happened like that before in the past. So if we stretch it out a little bit further, you can see here, last time before this time, you got in here, you got in roughly, you started testing this level in, what is that, October 4th, 2014, and it wasn't until here, October 21, 2015. So for a solid year, Bitcoin's price action traded inside of the undervalued region, and I am looking for something similar to this and this to transpire before we do actually start to get a bullish bounce going into the next halving. The next metric we're going to look at is one of my favorites. It is one of their newest metrics. It is the accumulation trend score. I'm going to go out a year so we can really see this play out. This is your old all-time high. That's when a lot of accumulation was transpiring. That probably had a lot to do with all of your up-only analysis guys out there, the ones who at every dip say this is a bull market and we're going to $5 million. Yeah, that's why you got a lot of retail buying as the bear market was starting. Markets are cyclical. They don't always just go up. It would be nice if they did, but they don't. So we were prepared for it while everybody else was still in hopium. We were looking for this to turn around, and I'm going to discuss why as well. But the last time we seen this indicator fire up with accumulation was when we put in the 2022 yearly high, the fresh yearly high. Remember that? That's when we were starting to sell into that as retail was buying a lot. Then we got our expansion to the downside. But what I want to show you here is finally, for the first time, we are starting to see accumulation happening at these price points. Now, just because accumulation is happening, that does not mean this is the low, this is the V-bottom recovery. It just simply means that bigger firms and other people are starting to add to their holdings at these lower prices, which is what you want to do. You want to buy low, sell high. I don't think this is going to be the bottom, but I do think that this accumulation can start that relief rally, if you will, to bounce up into monthly support. Once it gets up to monthly support, then we'll start to look and see if maybe it takes, a week or so to find resistance up there. If it does, then we'll start to short it and we'll look for those lower prices. But this is the first time this indicator's fired up, and I really like to see it fire up at the lows instead of the highs. Okay, so this is the 4-year market cycle data model that I built a while back. This was the reason why we got out. This is the reason why we were starting to look for a bear market. The purple lines here are your halving. If you're new to the channel, this you probably haven't seen this yet. The purple lines are the halving dates. Our next halving date is estimated to be around March 25th, 2024. So we're just now getting started in this bear market cycle. Every time after Bitcoin had a halving, you had a massive bullish rip to the upside where Bitcoin finds a top and then has a drawdown that lasts for a year to 2 years as price finds a market cycle bottom coming in close to the halving, as that is when we want to look to be a buyer again. Find us real close to getting to the next halving. This is when we want to start to focus on accumulating Bitcoin for the next bullish market phase. But all three of these bullish market phases that have come after the halving, all the tops were called in November November or December. Hence, when we got up here at the all-time high in November to December, we were looking for the market to start to pull back. If you also remember, in October, we started to hear rumblings of the Fed changing monetary policy from an uber bullish monetary policy stance to becoming we got to get in on top of inflation, so we have to rein in some of this stimulus money. We have to basically turn in the opposite direction. So if you are in an uber bullish monetary policy, opposite from that would be, so the 4-year market cycle has called the top. Once again, there is your top. We are looking for a correction. You can see that we are just maybe halfway into this. So we got 6 months of bear market looking at us right now. There could be another year of bear market, but when we get over here close to this region of price, we want to look to be buyers. Not where price is, but when price is. We want to find that bottom somewhere. We want to look to be buyers close to the halving. As we know in the past, every single time Bitcoin has a halving, you get a bull market rally. Now you're going to hear a lot of people say that this is priced in and it won't happen anymore, but they said that about this halving as well. I would take my chances on looking to buy the bear market lows. So back over here to the spot market chart, you can see currently here's daily support and 3 days support. Here is monthly support, $35,000 that translate with that CME gap fill on the upside. So we're looking for price to trade back up into here. We're looking for this area to hold as resistance. If we do get above it on a daily closing basis for a few days, that's okay. But if we do get back under it, then I will be looking for another resistance test for this wave to continue to the downside. Take out anybody that got long on this V bottom recovery, stop them out, then start to look for that bear market bottom. That's what we're looking for. That's how we're going to trade it going into next month, next 6 months. But next week, we're looking for price to shoot up, get sold into, and start to head back lower. Whether that happens or not, time will tell. All right, over here on the spot market chart, I got 2 moving average pulled up, a 200 EMA, which is an exponential moving average. That's your purple line, and the red line is your 200 simple. Now, in Bitcoin's history on the BLX and the spot market charts, anytime you have come into the 200 exponential or simple moving averages, you can see that those have typically been decent spots to look to be a buyer. We didn't test the 200 simple, but we have tested the 200 exponential. So what I think will occur is we'll find resistance and then come back down, maybe take out this swing low here and test lower into the 200 simple. Something of note here on the CME chart, let's get rid of the gap prices that are in our way. Focus again on the 200 exponential, 200 simple. Notice how on the CME chart, you have not tested either one of these 2 moving averages. Now, the reason that they're barely even on the chart is because the CME is new. You need 200 weeks before this moving average will even calculate itself, so it is new. But it's important to understand that you have not tested this 200 simple or 200 EMA on the CME chart yet. So spot market has tested one of these, but not both. All right. And then one more, we'll go back to the BLX briefly. All right, so here we are on the BLX weekly time frame. As this chart has more data, we can look back all the way to where you first got a population of these 2 moving averages, and notice how, they were really close to each other. That has typically been a decent spot to buy. Last time we had a bear market phase, what is this? This is going to be your 2017 bull market cycle, bear market phase. Did test the 200 week on the exponential moving average. The exponential moving average moves quicker. It puts more weight on near-term price, whereas your simple calculates all of it. That's why you tested it on the first time, but it took, several weeks before you finally tested your simple moving average. Here was just, this was your pandemic. So this price action, I really don't pay much attention to it when I'm looking at the macro, because you take away that pandemic and then you never probably get that retest there. But here we are testing it now. So remember, one test of it isn't all that important, but when price is trading inside of both of them, then it becomes a lot more probable that you're probably going to start looking for that bounce soon. So yes, this does suggest that we are coming into close to the bottom of our bear market. It also suggests that we have more room to go further to the downside. So you still have a lot of time to look to be a buyer, in my humble opinion. All right, so basically to wrap it up here, this is going to be daily resistance. If I go back to the daily time frame, you're going to see this level. This white line is that weekly support that I talked about. Notice how this bullish daily candle failed at weekly support. Then you tested weekly support again and got another bearish push. Yesterday we tested daily resistance here. So what I'm looking at for the near term for this week coming is I am looking for hopefully this support level to hold. And I am looking for a stab back up, test that weekly level, get above it, and then go on up and fill that $35,000 gap and test monthly resistance. Now, it might take a couple weeks to do all of that, but I am looking for that. So this would be a near-term bottom if that were to play out. But once we get back up to monthly resistance, if it finds resistance there and rolls back over, I do think that we will come and take out this low, and that would bring us into the 200 simple on the weekly as well. So yes, V-bottom recovery for the near term, potentially. Yeah, up to 35K, find resistance at 35K, and roll right back over. If you like the video, make sure you smash that like button for me. If you are new to the channel, also think about subscribing. We have been killing this market. Welcome to the team, and it's time you start to kill it with me. Make sure you guys trade safe, make sure you trade smart, and as always, happy trading, everybody.